Welcome, ladies and gentlemen. This is BetterTrades coach Robert Roy being brought to you from robertroytrader.com. Guys, I wanted to go over a quick market update for you today and take a look at one of the stocks that we recently got out of, actually the last position that we recently got out of in what we do in our market insights. So let's go ahead and check it out and start off with our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So, if you find a candidate, an indicator, a trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right, so guys, let's go take a look at those non-funded trades and, of course, the S&P 500. So if we look at the big picture of the S&P 500, I'm going to grab a markup tool here, a pen. You can see we had this great move on the equity itself, on the S&P itself, and then this pullback, which gave us our fibs. Right, we made a nice move up. Actually, let me do it this way. Let me put an arrow here so we get rid of that line drawing on top of us. So here's the move up. We came back down. We made this move up. We came to a higher high, and then we've dropped back down again, lower highs. And this uptrend line that you see here, this diagonal line, guys, that goes for a very long time. If we go back, and I've shown you this before in other videos. All right, if we go back and look, you can see we're talking all the way back from 2011. And that has been a great line for us in there, right? So as we zoom back in, getting a little bit closer, and we've got a Fibit drawn in here. A Fibit is a Fibonacci pivot, something we use very heavily in the market insights. Guys, you can also find it on my harmonic trading using Fibonacci DVD set. You won't find it out there in the market. It's mine. I created it. No one else has come up with it. No one's come up with another one like it yet. I'm sure someone's going to copy me again, but no one has come up with anything yet that I have found or seen. And we basically split the difference between these two lines because we cannot get a big enough move in the time period we need it to move. And there are all kinds of reasons and rules behind it. I spent about 30 minutes or so just teaching how they work. But regardless, there's support and resistance for our purposes now. We closed right at the Fibit itself, which is the 2045.40. We closed right near there, 2044.81. As far as I'm concerned, we're right at that line. It's support and resistance, or all these lines are meant to be. Right, so with that uptrend line taking place in there right now, and we look at the current pattern of what the stock is doing, I have what is called a bullish neutral bias. Bullish would be above the 8-period moving average. We're kind of below the 8, above the 55. It's bullish neutral. I'm bullish on the pattern, but I'm not willing to take a directional trade, regardless of being S&P or not. I'm not giving it a full bullish bias until the S&P gets above the 8-period moving average, and the 8 is on the highest of the moving averages that there are. Right? So our targets on the upside, and I just gave these targets in the market insights. On the upside, we're looking at the 2061 level and 2076-ish, right? 75, 76. And on the downside, we're looking about that 2029 and 2015 or 16 level right down here. Those are the targets that we have short term, guys. Obviously, bigger picture, we're going to focus on that recent high that we put in there, that 2093.55. Just barely missed out on that 2100. I think we'll tag it. Whether or not we break through, I'm not sure. It's all going to matter of how well this downtrend line holds and what this next push on this run does. All right, now I wanted to talk about one individual stock, which is Baidu. Guys, you can see where we've got the Fibonacci drawn on Baidu, and I'll highlight it for you so you can see exactly what I mean. We've got this great little move in here, up to this point. Baidu backed off, and that is where we drew the Fibonacci from. There are reasons we didn't use this point. Again, in the market insights, we went into exactly why that was. So what happened with Baidu, and I'm going to back the chart up now. All right, let's see, where do I want to back it up to? Let me get the date of where we entered Baidu. I'm not going to say anything yet because I don't want you to have an opportunity to adjust your screens. Okay, So on this date right here, we had a note on our update. So the note said on Baidu, bearish with a pullback to the moving average, right? So we've got our brown line, which is the 55-period moving average right there. We're looking for the pullback to that level. Now, we had already closed up here and come back down. That would have been actually an ideal entry on this day right here, except we hadn't done an update for 2 days prior, so I don't take the trades. Guys, unless I can physically show in a video that I said take the trade, we don't take the trade. Do my students know to take it? Yes. They knew if we closed right where it did on this day, if we backed off that moving average, take the bearish trade. I didn't call it there. I called it on this day. Right? So we may have missed out on that trade. But what happened on the very next day is we pushed higher and we ran up into that moving average even higher and rolled over. And when the stock got to 229.5, we took a bearish trade on by. All right, so let me bring paint in play here. We'll drag it out a little bit so I can cover much of the screen, but still leave it open enough that you can see what's going on. And we're going to be pulling off of the screen completely as we move forward one day at a time. So what happened was, this was January 2nd was the entry of our trade, right? So on January 2nd, we bought to open 10 contracts when the stock got to 229.5. Now, you may have chose to buy in the money options. You may have chose to buy out of the money options. That's really your call as to which one you did, right? That's my entry in the position, right? And our first exit came in on the same day, on the 2nd, at $227. So 226, about 226 was this level right here. Right, about $226 was that level right there. So about $1 above there is where we took our exit, was 227. So if we go back to paint, on 1-2, we sold to close 4 contracts at, when the stock got to $227. And actually, when I say we did 4 contracts, let me back up a second. It wasn't actually 10 contracts. We only entered this with 4 because we took this as an aggressive trade, which means we only had 1 contract to exit at 227. So when we looked at this trade, we liked the setup, but we were concerned because of how close the fib line was. So we said, let's just take 4 contracts. We're in the trade. If it moves in our direction, awesome. If it doesn't move in our direction, it goes against us. We've got some risk, but very small amount of risk comparative to what it could be if we did a full lot of 10. Right? And then what happened? Well, we're going to move forward by a day, and the stock pushed down on the next trading day, which was the 5th, to that 219.79, but that's not where we are out. We have a 221 level right here is our support, right? Let me see something here. So right about 220 is what that 50 percentile line is, $220, right? So we pull down to that 220. $1 above there is where we got out of our next portion of our trade. So on 1/5/15, we sold to close 1 contract at, when the stock got to $221. Right? Beautiful. So now we're managing the last 2 contracts we have. The very next day, we pull up on the stock, and now we didn't quite make it down to this next line, which would have been our next exit. We've got to watch. We had this big stretch down. We pulled up. If we get a pop, we want to be out of this position. We pop, and on the, 7th, on the 7th at $226, we are out of the balance of that trade. So on 1/7, we sold to close 2 contracts at, when the stock was at $226. Now, we still made a good profit on that position, right? Even though we got out of 226, we got into 229.5. My totals on this position, guys. Now remember, this was a very low-cost position. We had 4 contracts in there. We had a P&L of about $1,800. Right? And depending on the position you used, whether it was an in-the-money option or out-of-the-money option, that would vary, but your rate of return would be about the same, even higher if you're using out-of-the-money options. Right? And we got in on the 2nd, we got out on the 7th, so 5 days with a weekend in there, because the 2nd is a Friday. So it's 1, 2, 3, 4 trading days, right, is the total that we're looking at in there. Right? But 5 or 6 days altogether. But we're up $1,800 on this trade setup. So low cost to entry. It didn't go 100% in our direction, only partially in our direction, but enough where we know where we've got the highest reliability of profitability there. And that is a 2-line move. Guys, if you want to learn more about this, come and check it out at what we do at the Market Insights. All right, have a wonderful day. God bless, and I'll see all of you at the next update. Take care now, folks. Bye.